In prior interviews, I've told you that I didn't own gold because I thought it might go through 3,000. I owned it because I was afraid it would go through 9 or 10,000. Very different motivations. Gold traditionally does well when people are concerned about the maintenance of their purchasing power in other savings and investment products denominated in fiat currencies. The reason that I think that gold is starting to work is because people are starting to pay attention to the math. First of all, the U.S. 10-year Treasury is paying just over 4%. In a currency that I would suggest is experiencing deterioration of its purchasing power, more like 7.5% or 8%, which means that by receiving 4.2%, you are really losing 3.5% or 4%. There's nothing that would make people more concerned about the deterioration of their purchasing power than experiencing it. If you give the U.S. government your money for 10 years, they solemnly swear that they will make you 3.5% poorer every year for 10 years. The first government promise of my life that I believe that they will keep. What's the math behind that? Well, that's pretty simple. The on-balance sheet liabilities of the U.S. government exceed $36 trillion. According to the Congressional Budget Office, the net present value of unfunded federal promises, little things like Social Security, Medicare, Medicaid, federal government pensions, military pensions, according to the Congressional Budget Office, that number is $100 trillion. To put that in perspective, the gross federal budget before they spend a dime, gross federal income, pardon me, is $5 trillion. So we owe $130 trillion, and we propose to service that with a budget where our income is $5 trillion? What on earth is Congress smoking? The only way out of this circumstance that's politically feasible is to honor the nominal value of our federal promises while inflating away the net present value of those promises. It is, Andy, the only way I can think of. We've done this before. In the decade of the 70s, I was there. We reduced the purchasing power of the U.S. dollar, according to the Office of Management and Budget, by 75% over 10 years. Not coincidentally, the gold price went up 30-fold. I'm not suggesting that the gold price will go up 30-fold. I am suggesting that if the purchasing power of the U.S. dollar declines by 75%, which I believe it will, that the nominal price of gold will keep pace. And that isn't the $3,000 number. It's a much higher number. $3,000 U.S. will not 10 years from now buy you a fine men's suit. Right? Ripping bull market. How about maintaining your purchasing power? It may be that gold outpaces the deterioration of the U.S. dollar. It's done that before. It did it in the period 1970 to 1981. It did it again in the period 2000 to 2010, which is to say, in 2000 to 2010, the gold price was up 7-fold. But my suspicion is it will feel like a ripping bull market because the deterioration of the purchasing power of the U.S. dollar will prop the nominal price of gold. Or, put more simply, I feel much better owning it than not. Well, I am a shareholder of Luca Mining, and I similarly am impressed by Javier, the chairman, who is also, of course, the largest shareholder. I own it because I like Mexico, and Mexico's decidedly out of favor. The political process in Mexico is challenging for mining. There's a straight-up pinko as president, and the sociology is challenging, too. You have to be able to deal with extraordinary poverty, and you have to be able to deal with the narcotraficantes. Mexico is not an easy place for a gringo to operate, which means ideally, if you're investing in Mexico, you would invest behind a Mexican. And Luca is run for and by Mexicans, hardcore mining investors who I've known a very long time. They have bought 2 mines that arguably were starved for capital and mismanaged in the past, added capital to them, and their first challenge is to make those mines completely turned around. They are now generating cash as opposed to losing cash. That's good. But they need to show the market that they can buy mines that were mismanaged by gringos, that were starved for capital, turn them around, and generate cash from them. Their second challenge will be then to use that cash flow to explore the on-concession exploration potential, which in the case of both of these projects, I think is very large. Because these projects were both milked for cash by their prior owners, very little on-concession exploration was done. And so after Luca changes the operations around, they have to grow the operations through exploration. The third challenge they have is to rinse, wash, and repeat. You need to make companies in the mining business bigger. You need more scale. More scale gives you more trading liquidity, which gives you a lower cost of capital in a capital-intensive business. There were probably 30 or 40 mines in Mexico owned by Canadian or American or Australian issuers that have been starved for capital and are operated by people who in many cases don't even speak Spanish. The idea that you would operate a Mexican mine in Spanish from Mexico, as opposed to operating that mine from New York City or Toronto or Sydney, makes absolute sense to me. And that's the thesis around Luca. Will it work? I think so. I hope so. I don't know so. To reiterate what they need to do, an operational turnaround at their two existing mines, the initiation of intelligent on-concession exploration, and then the amalgamation of more assets into the whole that is Luca. That's our challenge. If they cause that to occur, if, not when, if they cause that to occur, this is likely a 10-bagger. Well, first of all, they bought the asset very, very cheap. They bought an awful lot of historical exploration work and historical physical plant very, very, very cheap. The other thing you need to know to begin with West Red Lake is that the author of West Red Lake, if it were, is Frank Giustra, who has been a serially successful investor in mining and in mine startups for almost 4 decades. I've known Frank as a very long time, as a competitor, as a partner. I've invested with him. He is a fearsome competitor, which means he's a great partner. My nervousness with West Red Lake is I think they put it in production too soon. I would like to see a new feasibility study. If they make it work, they save shareholders $12–15 million in a year. I'm afraid of this circumstance, and so I will be watching their quarterlies like a hawk. I was an investor in Tectonic. I sold my shares, and very recently I bought them back. I'm a fan of Tony Rudd. I'm a fan of generative exploration in Alaska. I'm a fan of their technical team. What happened was for years, they didn't put any numbers on the board. And I can be a fan of all that. And if you don't give me a reason to own the stock, I got to sell the stock, which I did. About 2.5 weeks ago, they put some numbers on the board. They enjoyed some exploration success. Is it a mine yet? No. But we have data now that validates the third dimension. We have data by way of drill holes that validates their exploration thesis. And their exploration thesis is big. This is a team that's done it before. So when this team proposes a thesis to you around data, you have the ability to say, this may be true, this may not be true, but it's being proposed and tested by people who have been serially successful in a task that closely resembles the task at hand. Their prior exploration success was gold in the far north. What they're involved in doing now is gold and copper in the far north, which is to say their expertise is relevant to the task at hand. And finally, after several years of trying, they put some numbers on the board. They'd given me an excuse to own the stock. Well, I love Mindoro. First of all, I'm a huge fan of Tia, the woman who runs the company. She is exactly what you want in an exploration. She's very bright, she's very tenacious, and she's cheap. She reminds me of a young female Ross Beatty. She throws around nickels as though they were manhole covers. She didn't buy her royalties. She generated them. She caused them to occur. She generates exploration ideas with her team, and she farms the ideas out to bigger companies who do the heavy lifting. Her interest, resulting interest, promoted interest in the company is by way of royalties. This is a $16 million market cap explorer that's cash flow positive. They generate so much money from exploration fees for third parties that they pay their salaries, listing expenses, and audits. In other words, your net general and administrative cost in Mondoro is sub-zero. This doesn't happen in a company its size. And it goes to the reputation that the team enjoys with larger mining companies who invest with them and trust them. It goes to their exploration efficiency. And it also goes to the fact that these people are just very, very good, honest business people. Something very rare in the exploration sector.